All right, guys, good morning. Hope you all are doing well. But we'll jump in here, guys. It is Wednesday, June 29th. Um, and obviously, guys, pretty crazy stuff there yesterday. So looking at the futures here, things are pretty quiet. The S&Ps are flat. The QQQ futures pretty much flat, and the Russell 2000 flat as well. So pretty quiet here ahead of the open, and we are getting some economic data this morning. But of course, yesterday was pretty crazy. So, kind of felt like a huge a huge flush that kind of came out of nowhere. So the big question now, guys, is does yesterday's flush, from here, do we immediately roll over and head down to make brand new lows? Or was yesterday a bit more of, kind of the shucking and jiving, the shaking and the baking ahead of the big quarterly expiration? So keep that in mind. Tomorrow, the 30th, that's quarterly expiration. So quarterly expiration, of course, it's the end of the month. So that's kind of the big question. Does this flush lead to a move back down to new lows, or are they going to try to run this a little bit higher into expiration? So if you guys look at a 15-minute chart, we came into yesterday's session looking pretty good. So for the S&Ps, the QQQs, the Teslas, the Amazons, you had a few 15-minute, 30-minute squeezes at yesterday's open. So, good structure. We had the big three buy signals, and you got the initial pop. But of course, that turned out to be a bit of a bull trap. And they walked the market down all day long. If you guys look at like a 5-minute chart, probably maybe even a 1-minute chart, but if you look at the 5-minute, you can't even get a pop above your 5-minute 21 EMA all day. So that is some pretty good selling pressure. But as far as a few, I think, interesting observations, if we focus on the big three signals, here's my expectation. If the market is going to roll over from here, we should pretty quickly start to get some sell signals on the lower time frames. So what's interesting about yesterday is, and this goes for the Qs, this goes for the S&Ps, IWM, and it even goes for names like Tesla and Amazon, who were down, like 5% yesterday. The interesting thing is, even with the flush, we don't have the lower time frame sell signals here. So for the S&Ps, the 2-hour, the 1-hour, the 30-minute, the 15-minute chart, they're still neutral. For the QQQ, daily to the 15-minute is neutral. And I'll show you a few more here, like Tesla. Daily to the 15-minute, Amazon. So to me, pretty interesting. But the major thing I'd want to see here today, again, if we're going to continue to roll over, we should start to see the 15-minute, 30-minute, even the hourly sell signals. Being that we flushed, to a pretty big extent, and we don't have any sell signals just yet. If anything, guys, it is interesting. And then as far as the volatility index, for today, this is probably going to be the most important chart. So if you're looking for the market to rally here into Thursday, Friday, you're going to need a pretty big flush here for the volatility index. So if you're bullish on the S&Ps, you want to see this go lower. But yesterday, what was interesting was, again, Tesla's down 5%, Amazon's down 5%. Really big flush in the indices and the stocks, but you didn't really get a huge pop here in the VIX. Now, you are popping a little bit here this morning, but the other expectation is like, okay, if we're going to see the market roll over, we should start to get the 15-minute, the 30-minute sell signals on the indices, on the stocks, but then we should also start to get a few buy signals here on the VIX. Because the VIX isn't going to go from 28 to 30 to 32 to 35 without a 15-minute buy signal, eventually a 30-minute buy signal. So as far as some observations from yesterday, that's what kind of struck out to me. Big dump in the S&Ps, big dump in the Qs, but we still don't have any lower time frame sell signals. And granted, if we get them today, market roll over. For now, though, it's all a little bit neutral. So for today, and you could look at the futures, I think, look at a mix of the futures and the cash product. My whole focus here today, if the S&Ps, and it's a bit of a tall task, but if the S&Ps can get back above the hourly 21 EMA, so I really suggest you guys write down that level or mark it up on your charts. If they can get it back above the hourly 21, then I do think the door is open here for a push towards 390 towards the end of the week. And if you guys check out like the SPX for Thursday's expiration, all the big open interest on the put and the call side. So not just the put side, but on both sides of the options chain, a lot of the big open interest on the SPX is right around 3,900. But mind you, the market could certainly roll over today. But into quarterly expiration, if the market is on a mission to hand out as much pain as possible, 3,900 might be the spot. But we've got no shot of getting there if we can't get back above the hourly 21. So to me, that's a really important level. And then I think, any prolonged price action under 380, I think the market's in a little bit of trouble. So as far as the bulls are concerned, step one here, they got to hold 380. Step two, they got to get it all the way back above the hourly 21. If they can make that happen, then you might have a little bit of the double trap here, or maybe the triple trap. Flush the market, trap the shorts, squeeze them. Along the way, you get some bulls trapped up here yesterday. So you spank the shorts, you spank the bulls, potentially on this flush. Maybe they're trying to trap a few more shorts here, and then you get the push towards the end of the week. Under 380, none of that happens. If we can't get back above the hourly 21, it's pretty unlikely that happens. So focus on the S&Ps, guys, and as a general statement, that's pretty much going to dictate, where everything else goes. So as far as a few open trades that we have, and admittedly, a flush like yesterday does kind of throw a wrench in a little bit of the game plan. But as far as our open positions, we've got some shorts on Rivian. So certainly glad to have a few shorts here in the back pocket. And if you guys are looking for shorts here, I still like this one. Bearish daily squeeze. We have the big three sell signals on the daily chart in the 15-minute. So that looks like it wants to roll over. Now, if the market rallies, it probably doesn't roll over just yet. But we got a short there. Then we've got some iron condors on the S&Ps. So if these iron condors expire tomorrow, and for max profit, we would need the SPX to close above 37.50. So more than likely, if we get a bit of a pop here today, or if we get a rip here today, probably just take the profits and move on. So those trades look pretty good here. But then we got, in the options room, we've got to put credit spread on the S&Ps for tomorrow's expiration at 3,900. So of course, for that trade to work, you're going to have to see, pretty much what we just talked about. Hold 380, back above that hourly 21, then you kind of take it from there. So we got some put credit spreads on the S&Ps, and then you got to put credit spread here on Tesla. So, a good example of as goes the market, goes the stocks, because Tesla at the open yesterday was looking beautiful. 15-minute squeeze, 30-minute squeeze. You had the big three buy signals on both time frames, and that tried giving you that push. But when the market failed at the hourly 200, down goes Amazon, down goes Tesla, down goes everything. So this is where it all gets a little bit, a little bit interesting. So the trade that we have is a put credit spread at 720. So kind of like the S&P trade, now we're in a position where we need a little bit of upside. And it's not so much a question of, hey, can Tesla move from, 690 to 720? Can Tesla move $30 in 3 days? Absolutely. Tesla can move $30 in 2 minutes. For a Tesla trade, for an Amazon trade, an Apple trade, what it's really going to come down to here over the next 3 days is the S&Ps and the QQQ. Tesla is very likely to continue to roll over, is if your S&Ps lose 380 here and they start to fall apart. Where Tesla's probably likely to rip, and potentially really rip, is if the S&P squeeze the shorts up towards 3,900. Right? And obviously at the open, guys, things are pretty flat. So for now, we don't have too much context heading into the open. But we got a few key levels to watch. I think you want to put the VIX on your watch list. And then be patient today, guys. See how things unfold. Usually into quarterly expiration, things definitely get a little bit wacky. So that could be a huge flush. That could be a huge rally. It could be a total violent chop fest. So my suggestion is be prepared for anything. And then I wish I had a few good signals to show you guys here, but frankly, everything's a bit neutral. So in terms of a lot of the trends that we had been focusing on, a couple of weeks ago, we completely stopped buying the dip on energy, natural gas, and crude oil. So as far as buying the dip, that's been a good decision so far. These just look pretty busted for now. So I don't see any bullish trades in energy. Let's check UNG. Now keep in mind, these things are getting pretty oversold. So yeah, could UNG rally back to that falling daily 21? It definitely could, and at some point it's probably going to. But this is a little bit different than what it once was. Get the green buy signals back here. You've got your trend, you got your structure, you got some good bullish momentum. So energy's a bit, I think, a bit wrecked here. UNG is pretty sloppy. And then for crude oil, I'm pretty sure I had a good move yesterday. Interesting. Really big move. Not sure I want to get long just yet, but yeah, really impressive. So not seeing too much here in the form of really, really solid bullish trends where I want to get long for 30, 60 days. This market, guys, is a little bit short term. But for now, y'all, that is what I got for you this morning. Your major focus, at least I think, should be on the S&Ps and the QQQs. Focus on a few key levels of support. Focus on a few key levels of resistance. Tie that together with your internals. Keep a close eye on the VIX, and then the S&Ps, the Qs, where they go, most of the stocks will go as well. But we got a few minutes here before I got to jump into the options room for the open. So if you guys got any questions, any charts you want to take a look at this morning, throw it at me and we'll take a look. See the Qs here. Yeah, quiet open. Quiet open. So check out the big three signals on the futures. Neutral from the daily to the 30-minute. So think of the size of yesterday's flush. The only sell signal I have is a 15-minute chart. So based on my criteria, all this means is that for now, the daily, the 4-hour, the 2-hour, the 1-hour, the 30-minute, they're not necessarily suggesting the immediate path of least resistance is to the downside. So the market's definitely going to throw up here if all of a sudden we got a 15-minute sell signal, 30-minute, 1-hour, 2-hour. It'll basically start to fall apart from the inside out. But it's neutral here, which is interesting indeed. The S&P futures, let's check the small caps. So stay tuned. We'll see how that progresses here today. But all I know is if we're going to roll over from here, you would start getting some sell signals. So I'll keep you guys posted as far as that goes. Hey, Jared, what's up, brother? Good to see you. Lily Bell, Eli Lilly, on the pullback to go long. It's a tough call, man, because structurally this is pretty bullish all the way down to the daily 21. That's another, call it $10 to the downside. So I think the key here is if we're not going to wait for that dip, we're going to try to focus on a lower time frame. So we've got the daily 4-hour, 2-hour buy signals. So for now, the lowest time frame of the buy signal is the 2-hour. So if you check out the 2-hour chart, okay. Not too shabby, right? You get the initial push. Here's the first back test of the hour, the 2-hour 21 rather. But you still have the active buy signal. So, depending on how today goes, this might be one spot to nibble. And it could certainly just continue to rip off that 2-hour 21. So, Jared, I think you could take maybe a partial position here. But just keep in mind, if it breaks down a little bit more, this does hold really good structure all the way down to that daily 21. But the 2-hour chart checks out for now. I like it. I like it. Hey, good morning, Terry. Good morning, Miss Mimi. So, Tyler, the big three signals, those are coming out in about, at this point, about 3 to 4 weeks from now. So, guys, when I have official, when I get the official launch date, when I get the webinar date, we'll start sharing that here on the channel. We'll start sharing that on the Twitter and all that good stuff. And then I'm sure what I'm going to do for the YouTube channel is just put together, really in-depth video breaking down the indicator, which is probably a good idea to do before we release it. So that's all coming soon, Tyler. Good morning, Janice. Good to see you. Squeeze the cheese. I like that. I like that. Squeeze the cheese. You're looking at SCO. Looking for a short there. Yeah, breaking that 21. Yeah, the move in crude is pretty nutty yesterday, so I'm not sure if that's not sure if that was a news play or what the case is, but yeah, pretty big rip. All right, that guys, and now there you have it. The first Thinkorswim freeze of the day. I should keep track. I wonder how many times per day Thinkorswim freezes up on me. But all right, guys, let me see what time is it here. 9:02. All right, so I'm gonna cut you guys loose here. I do want to get on the mic a little bit earlier here this morning in the options room, kind of get everyone ready for the open. But again, guys, as a quick recap, if Thinkorswim unfreezes, I can actually show you the chart. But as a quick recap, focus on your S&Ps and focus on the VIX. And we know the classic formula. VIX higher typically means market lower. VIX lower typically means market higher. So focus on those two, and then I think the big level here for the bulls, for the good old bulls, would be the hourly 21. You get the initial rip, you get the back test. The back test fails, but notice how you come down here and you just ever so slightly start to fill that gap. Again, this is all food for thought, right? I'm ready for whatever, but just trying to take different things into consideration. What this could be a little bit of is, okay, everybody buying that gap, they're probably putting their stops right underneath it. Right? So Friday morning, you're buying the S&Ps at 383. All right, I'm going to put my stop under the open and let it go. So this could be the beginning of a huge flush back down towards 360-ish. Again, this could be your shenanigans in the quarterly expiration. They rip the market, shake out the longs, trigger those stops, and then potentially turn it higher. So a few things to keep in mind, guys, but as always, I appreciate you joining me here this morning. I wish you all the best of luck today. And for those of you in the options room, I'll see you guys in about 5 minutes.